Hey everybody, Chuck Barone here. Monday, August 22nd, 2022, and the markets had a tantrum today, didn't they, guys? Wow. Before I start the video today, I want to thank my man Jordan Dove for helping me out with the production on the videos this week. My regular producer guy, Jake Lewis, is in Ireland for a Nebraska Cornhusker game. Go Huskers. And he gets a vacation to Ireland, and we get to stay here working like, well, I wish I could say slaves. We were busy, but we're not. So anyway, thanks to Jordan for helping out with the videos this week. In the markets today, well, like I said, the markets had a big old tantrum today. Another one of those weird days in the market where the markets just hated everything and everything was down. Stocks down across the board. NASDAQ really taking a beating today, down 2.5%. S&P down over 2%. That's a pretty big down day for the S&P 500. You know, when you see the S&P going down like that, that's pretty much telling us that the whole market got shredded today. And I guess the stock market's coming to grips with the idea that this pivot that they were anticipating happening pretty quickly is not going to happen. You know, we've had the parade of Fed yo-yos out there talking about how we're going to get this inflation under control. And I'll have a little bit more about that stuff in the market commentary coming up. The bond market today also a down day. Bonds selling off. The 10-year rising to 303. Oh my, no wonder the market's having a tantrum. They hate this 10-year at this level. Interesting thing is you got the 2-year at 333, so now the yield spread between the two is narrowing. It was about 48 basis points, almost a half a point difference. Now it's down to 30 basis points. The yield curve flattening out. The bond market in disarray, not happy at all. Just they're looking at the reality of rates going up, and it is what it is, bond market. Deal with it. The dollar today, with rates going up, you know how the dollar is going. It's going up with those rates. The dollar almost to 109 on the dollar index, man. That is a very big number. It's going to put big pressure on everything, even stocks, truthfully, because now we're a country that imports everything. Metals, especially down today. Gold down at $17.37 an ounce. Silver down at $19.08 per ounce. Going to be tough sledding for metals right now, guys. This strong dollar is not only kicking the crap out of every other currency in the world, but it's now putting big pressure on metals, which kind of move the opposite of the dollar. As the dollar gets weaker, metals tend to be stronger and vice versa. So it looks like going to be, until you see this dollar starting to go down, getting closer to even at par at 100, there's going to be a lot of pressure on metals. So you metal people who are really into it, I'd be rooting for it to continue down a little bit and look for a buying opportunity here to add to your supply at lower costs. It looks like you're going to get that opportunity, so keep some powder dry there, guys. Oil today was down $90.63 per barrel for West Texas Intermediate. Oil under pressure, not only from this strong dollar, but now they're talking about China's cutting rates. Their economy is in shambles. They got a big real estate issues over there in China. The world economy weakening, demand for oil they're anticipating coming down, putting pressure on oil. Natural gas, on the other hand, up again today, almost 5% to 978 for their 1,000 British thermal units. Natural gas, I still think, got a way to go for the upside. When it becomes crystal clear that Russia is going to cut the gas off to Germany and the Eurozone this winter, natural gas is really going to have a giant jump. I think that, natural gas, even at these elevated prices, has a ways to go, depending on what our friends in Russia do. Bitcoin down again today. It looks like Bitcoin's looking for some support somewhere. It's settling just above 21,000, 21,100 roughly. I think Bitcoin's probably going to go down, test those lows at about 18,500. Hopefully it doesn't happen all at once. Bitcoin looks, I was really thinking it was about to rally. And we had a pretty good move up from about 18,500 or 19,000 to about 24, almost 25,000. Looked at some profit taking there, and now it looks like it's just kind of lost all its momentum And looks like Bitcoin has still a scooch ways to go to the downside. And I'm sure the strong dollar is putting a little bit of pressure on Bitcoin as well. Big week coming up this week, guys, for data. Some very important stuff coming up. Tomorrow and Wednesday, Tuesday and Wednesday this week, we're going to have housing data that's going to show, well, Tuesday we get new home sales. I'm going to guess that's going to be down pretty dramatically as far as sales goes. What's going to be interesting to me is seeing what's happening with prices, because real estate right now has been stubborn about lowering prices. They're starting to come down a little bit. I thought it would be a much more dramatic move than it has been so far. But with mortgage rates trickling back up, we'll see if that puts pressure on new home sales and new home prices. On Wednesday, we get the Mortgage Bankers Index, and that one's going to be down as well. You know, we've already been talking on the show about how mortgage companies are starting to close, massive cancellations on contracts, mortgage bankers going out of business and cutting staff, cutting people like crazy. So these are going to be two very interesting numbers, because real estate really has a big ripple effect throughout the economy. So when new housing, new home prices are going down, that affects a lot of people, man. That affects all the people who sell wood, who sell shingles, who sell all the little doodads that go into a house, all the electrical outlets and the faucets and everything that goes into a house. All of it starts to ripple through landscapers and concrete guys and construction workers and finishers and carpenters, and it just ripples all the way through the economy. Not going to be a good thing for people who think that this recession is going to be pretty shallow and short. And mortgage bankers, well, those guys are toast, because refis have pretty much gone the way of the dodo bird. There just aren't any more refis happening right now. So until rates start working their way down, I anticipate mortgage generation is going to continue to be pretty slow. On Thursday, we get some big data, though. Those first 2 days are kind of confirmed or held down to just housing and real estate stuff. But on Thursday, we're going to get a GDP number, which is going to be very interesting, because I believe it's going to show the third consecutive quarter of declines, or heading toward the third consecutive quarter. And also on Thursday, we get initial jobless claims, which is really interesting, because that's the one thing right now that's been holding strong in this economy is jobs and the job market. So it'll be interesting to see if initial jobless claims come up a little bit. On Friday, we get some indexes. We get the personal spending index, personal income index. We get the University of Michigan Consumer Index. This is all going to tell us a little bit about how personal, rather than institutional businesses and, mortgages, companies, and real estate, this is about personal people. Are people making more money? Are they spending more money? How are things going? What do the debt levels look like? And the consumer index is going to give us an idea of where consumer sentiment is going forward. Do people believe it's going to get better or worse? And also on Friday, the very big one, Fed Chairman St. Jerome will be out there at Jackson Hole, the annual Fed meeting in Jackson Hole. I guess he's going to give a pretty big speech on Friday. I think that's part of the reason we had our tantrum today in the markets is, I guess Chairman Powell is going to be telling the world that regardless of what happens with the economy, their number one task, recession or not, is going to be to get rid of this inflation. And if that's the case, we're going to see rates continue to rise and rise pretty quickly. An interesting little tidbit I saw today, across the pond, our friends in Great Britain, their economists are projecting that inflation next year in Great Britain will actually hit a number, they're saying 18.6. Now this is a staggering number for a country like Great Britain, a developed economy, a developed country, to have that kind of inflation. I think that the English central bank had better be thinking about getting rates up quick, because those kind of inflation numbers are intolerable, and it's going to cause some serious unrest no matter where it happens, England, the United States, or anywhere in the world. So these numbers are shocking, and it's another hint that this inflation thing that's happening here in the US, it's not going to be something super simple, super easy, super fast to get rid of. All these economies around the globe tend to be linked, and there's all seems to be heading in one direction: high inflation toward recession. An interesting thing I heard today, this is interesting, I want to put my glasses on to read this quote to you today. They were talking about the Fed rates and Fed pivot. The economist said that when the Fed funds rate is lower than the core inflation rate, when core inflation is above 2.5%, which it was 5.9 last month, the Fed has never shifted to easing, to cutting rates, unless a recession has pushed unemployment over 6%. So what that tells us, this is another history thing, it tells us that in the history of their counting Fed funds and Fed cuts and inflation and how they work together, the Fed is going to continue to raise rates until one of two things happens. Until the core inflation rate gets below 2.5%, or the unemployment rate gets above 6%. Which is interesting because that's the number that Larry Summers used when he said we would need to see employment actually over 6% for 2 years to get rid of this inflation. It's interesting that that's the number that corresponds with what these economists are saying. Another real estate news, rent controls are in the news. It's a big fight in Florida. They had a big fight here in Nevada, North Las Vegas. The people wanted it. The city council voted it down. I think it might be something heading for the ballot in the state this year. Rent controls seem, if you look at it on the face of things, seem like a good idea. Okay, you can only raise your rent as much as the consumer price index rises every year, but the effect just doesn't work out that way, guys. What it does is it slows real estate, it slows construction, it discourages investors who are really right now a huge part of this market. Actually, I was talking with George today about real estate, and he told me that 24% of the closings across the country this past month have been cash in the real estate market. That's really not a normal number, guys. And I think that just shows us that the corporate world is still in this market. Corporations are starting to scoop up properties. We've talked on the show before about Blackstone's $50 billion real estate fund. It's going to put upward pressure on prices. And I think that's a big part of the reason we're seeing sales declining, but prices on real estate coming down so grudgingly. Anyway, that's pretty much what I got today, guys. There's not a lot happening in this market other than, watching the market have a tantrum and sell off pretty much everything today. Tomorrow's report on new home sales, I think, will be more bad news. I think these markets are all focused on the Fed now. So we'll see what happens toward the end of the week with this GDP numbers, with unemployment and what they say in Jackson Hole. Going to be a very exciting week for all of us. We'll be here every day. Like I always say, guys, if you like what you're hearing, hit the like. Ask me your questions in the comments section. Of course, leave your comments as well. Subscribe to the channel if you already haven't. P.S. Check your subscriptions because YouTube right now, it seems, is unsubscribing people again. So make sure that your subscription is in place. Make sure to click the bell so you get notifications. Big week coming up, guys. We'll be talking about these markets every day, kind of giving you some guidance on where we're going and what you should do. Until we talk again tomorrow, guys. Take care. Thank you.